So could you answer this investment banking question?
What is the rule of thumb for assessing whether an M&A deal will be accretive or dilutive?
Wow, can you explain me the answer for this one?
Certainly, the rule of thumb for assessing whether an M&A deal will be accretive or dilutive primarily focuses on the price to earnings, PE ratio, of the buyer compared to that of the seller. In all stock deals, if the buyer has a higher PE ratio than the seller, then the deal is likely to be accretive. This means that the buyer is paying less for the earnings of the seller than what the market values their own earnings at, resulting in an increase in earnings per share, EPS. Conversely, if the buyer has a lower PE ratio than the seller, the deal will typically be dilutive. In this case, the buyer is paying more for the seller's earnings compared to the market's valuation of its own earnings, which can lead to a decrease in EPS. In summary, the key takeaway is that the buyer's PE ratio compared to the seller's one determines whether the acquisition is accretive or dilutive. Understanding this relationship helps in evaluating the financial impact of the merger or acquisition on the buyer's earnings.